Hello everyone, this is today's video analysis for October 17, 2018. Today we're taking a look at the USDJPY, the US dollar versus the Japanese yen. For today's trade analysis, looking here on the daily time frame in the live daily trade room, we've had some discussions about what's the trend. Are we looking at longer term trends, mid-term trends, short-term trends? And I think as traders, we have to be aware of every trend that the currency pair is going through. And as an example here, you see a few different trends here on this page. You see the longer blue trend line, long-term uptrend going all the way back into early 2018, March of 2018 at the bottom. It's been a very long-term uptrend, but if we always focus on that long uptrend, we may forget about some of the periods where the market is going down. Take a look at that red trend line. If we were only focused on the uptrend during that period here, we either missed out on trades or we tried to trade against the movement that the market was making, trying to buy throughout the life of that down red trend line. We could have been deeply in trouble. So we have to be aware that there are multiple trends for the currency pair, longer, midterm, short-term, intraday trends that we need to be aware of. So we've been having that discussion a little bit over the past couple of days in the trade room. We begin to zoom it in here on the yen on the daily time frame. We can see there was a stronger leg of the uptrend, this blue trend line here, where it moved swiftly higher all the way back above the 114 level, capping out at the highs here, and then turn right back around. So this black trend line has been the recent trend. Past 2 weeks have been more bearish than bullish, but it is interesting enough coming right down towards that blue trend line in the past couple of days, testing right there into the mid to upper 111s into that blue zone. Now today we see a little bit of a shift again. Yesterday was stronger bullish than bearish. We see the market going from the 1170.85 level, the blue zone, to the purple zone, 112.10, 112.25, and now today we're challenging above that resistance zone. So again, keeping aware of all of the trends is vitally important if you're going to be trading. Intraday wise, I would say more bullish than bearish now, even though the past 2 weeks have been bearish. So let's go ahead and zoom it in one more time. So if we're looking at this, it's now evident that it was bouncing around between the purple zone and blue zone. Blue zone was our support a couple of days ago. Pushing above the purple zone today, though, gives us a clue that we may be looking for some further push higher, further move back in the other direction, which is against what has been the trend for the past 2 weeks. If this goes up, the past 2 weeks have been more bearish. So we're looking at a potential shift in direction again as it pushes through 112.25. Of course, targets on the way up, if it continues to move in that direction, yellow zone 112.55.70, orange zone becomes 113, 113.15. So those become our targets on the way up if it continues to pressure back in that direction. Let's take this older fib off and let's just take one singular Fibonacci retracement level, because now we have the potential of retracing this black trend. Let's take Fibonacci top to bottom of that black trend, and we can see the 236, 112.30. We're challenging that now. 382, 112.75, which is just above the yellow zone, 50% orange zone, and by the way, 618 a little bit higher up here towards the green shaded area, right between the orange and the green shaded area. And the risk here, of course, is that it doesn't continue to pressure higher, gets back underneath the purple zone, and goes back lower. Let's take it down to the 4-hour time frame just to get a little bit deeper view of this. Take a look back here, the black box that you see over here for several days. This is the 4-hour time frame, but you can see a couple of days just kind of holding above that purple zone as support. So what that tells us is that there's a significant decision point here, 112.10.25, where the market historically held this as support. Sure, dipped down here one time and came back up, but there's this measure of support here, statistically and factually, back here inside that purple shaded area. So what that does is it helps us determine what we could do with this today. As long as it stays within and above the purple zone, what does that tell us? There's potential support and that it could rally back higher on potential reversal here of the black trend line. Not necessarily reversal of the long-term uptrend since March, which has always been bullish, but of the black short-term trend. Staying above the purple zone, we look to focus our targets back to the yellow zone and the orange zone. Stop loss, if you decide to take a long shot today, will be underneath the purple zone, because at this stage we want to see it stay above the purple shaded area. So we need the US dollar to continue to rally as it has been for much of the morning already. We're seeing the U.S. dollar rally back. We would see this potentially head back towards the yellow zone and the orange zone as it continues to rise. But main focus today is this purple shaded area. Above it, as it was back here, is support and potentially rallies to new resistance highs for the U.S. yen today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.